Welcome, everyone, to another spectacular episode of Thrive Loud with LouD, connecting you to the most inspiring and amazing people that are thriving each and every day. I'm your host, Lou Diamond. Today on Thrive Loud, we have a man whose passion is to take the uncertainty out of investing and provide consistent returns his clients can count on. As a certified investment management analyst and certified financial planner, he has over 20 years of experience in the financial industry. He heads up Cornell Capital, which was born out of a need recognized to truly create consistent, predictable income and wealth creation. We're going to get down to brass taxes here, Thrive Loud listeners. I've got Dana Cornell here on Thrive Loud. Dana, how are you today?
Doing well, Lou. Thanks for having me, man. It's a pleasure.
Dana, I'm a big fan of your last name, needless to say, because I went to the university. Obviously, you've come up with consistent ways. You've seen things that didn't work. You've seen things that were probably pretty successful. Maybe share with the listeners at a high level a little bit about how you work in helping to plan financially with your clients in the way that you do it at Cornell Capital, and the uniqueness that makes you and your company you.
Yeah, so I think that's best explained by the first part of your question of what did I see that wasn't, what part of that system was broken in a sense. And by the way, I always think it's amusing, but when I resigned, right, because I just resigned and walked away out of respect for my former partners and the team and all that, they literally asked me if I needed mental counseling, because nobody does that at Morgan Stanley. But it also shows you how much I believed in the new way I was going to build wealth and work with clients going forward. So looking back, we're taught traditional stock and bond management. Bonds are safe. That's your income. Stocks are going to ebb and flow, but you should make this. And it always bothered me that we're taught, first of all, the average investor makes less than 4%, right? Based on largely emotion, misappropriation with asset allocation, you name it, but that's the reality. So when I'm looking at doing a financial plan for a client, and I'm trying to get them to save the most amount of money they can save to then back into income and try and put some safeguards in there for a cushion and show you a little bit less income so it can grow for inflation. I started looking at that, and then I started reversing their financial plan. And to me, and this might be overly simplistic, but I started talking about, how do I help you buy your time back now? So maybe you can work less. Maybe you can be financially free sooner, right? So let's focus on high income producing investments, work to replace income like that. And then I realized, man, I'm using 100% of your assets in a traditional financial plan. Using the alternative investments, and that's the key switch here, using the alternative investments that we use for roughly 30 to 40% of your allocation with us, I can replace your income with that percentage of your total net worth, which takes all the pressure off the rest, right? Then I also don't have to, markets are going crazy right now. I'm getting past clients calling me going, man, this is insane. The daily fluctuations, I don't know if I can take this anymore. That's going to throw your plan off. You're going to end up being that person that makes 4%. Not to mention, we could talk all day long about forward-looking projections of publicly traded investments. So I just reversed it. We start with income first. I focus heavily on alternative assets with institutional managers that people probably wouldn't get access to. Some do, but to pair them in the right way, that's our main focus. That's the core of what we do.
Gotcha.
Replace your income, then the rest of the pressure is off, right? Because honestly, at least in my opinion, publicly traded stocks and bonds it's commoditized now, right? Schwab, Fidelity, anybody will give you a model to manage that for free. It's good advice and access to things that you wouldn't normally get: higher income, tax efficiency, upside appreciation, all that good stuff. So
how do you provide comfort in the uncomfortable situations to your clients, right? Because you're 100% right. The emotion is very much in there, but it is difficult to distance them from the emotion because, seeing your portfolio balances and your, P&Ls go up and down is really personal any way you look at it. How do you take that? And what is your approach? Because I could tell already from speaking with you, you have a easygoing manner about yourself, but to provide that level of comfort, tell me what you do.
Yeah, I appreciate that question, because to me, it's one of the biggest things, right? So you came from that world, we're trained as a financial advisor talk about historical averages and, historical trends and how long they last and how often they come as far as market downturns. The reality is we don't know, right? It might rhyme with the past, but it's not going to look the same. And it also then totally depends on where you as a person are at in that cycle, right? If you retired in 2007 versus retiring in 2009, right, or after recovery, big difference. So to combat that, and I got sick of telling that story, right? And you'll see a lot of advisors get burned out because they don't know. They're just hypothetically saying, hang on, it'll be okay. And clients kind of put their head in the sand and want to be in the dark a little bit because they just have to trust it because there's not another answer.
Yeah.
Right. So I said, look, most clients don't even know what they own. They don't know why they own it. They don't know how it operates. Right. And it's usually not built for the individual. It's built for the institution. It's all rep fees and all this stuff. And the name of the game is assets under management and how much fee we can take on that asset. So again, quite simply, and I had started investing in commercial real estate, which, at least you have a reasonable projection of where that should go, where rents, people understand how it works. So people rent an apartment, they pay me rent. Pretty simple stuff, right? And private businesses. I mean, we have a small business contingent in the baby boomer generation that's built incredible businesses. It's the backbone of this country. They need an exit plan, but they're also probably tired to go in there and scale it, sales, marketing, operations, So I pair those two together from a private investment side, along with private debt, things that you can get actual true higher income to beat, at least keep up with inflation. And that's the core of a portfolio with us. And that brings the level of clarity and consistency, as you kind of mentioned in my bio. I wrote that because that's the feedback I get from clients, right? At least they know when their check's going to show up. They know they're going to get their principal back within, nothing's guaranteed, of course, but they have some sort of sense which brings comfort to them. They at least understand what's going on instead of a buy and hope type strategy.
Let's do that again. Thank you so much for coming on the program today. Truly a pleasure to have you. And everyone check it out. Cornell Capital, Dana Cornell. It's truly a guy who's looking out for your best interests and helping to plan things along the way. So thanks for doing that. And thanks for coming on the program.
Thanks for having me. Really appreciate it.
You got it. And to all our listeners out there, thank you for joining us. And until next time, keep moving onward and upward. And remember, be brief, be bright, be gone.